Good morning, I'm Clinton Griffiths. The war in Ukraine, ongoing supply chain issues, and inflation all are continuing to shape the ag economy right now. But what could they mean down the road this year? USDA hosting its annual Agriculture Outlook Forum. AgDay's Michelle Rook joins us, and Michelle, ag officials are looking at plantings of corn, soybeans, and particularly wheat.
Clinton, USDA is looking at increases in acreage for the three primary crops in 2023, with the biggest increase coming in wheat. Now, as a result of that and a break from La Nina, which will mean more normal weather, the season average prices received by farmers for all three crops are projected to be lower than in 2022. Now, the good news is they do remain higher relative to historical averages over the past 10 years. USDA projects the biggest drop in price for corn, down $1.10 from this year. Chief economist Seth Meyer estimating ending stocks will be up 620 million bushels, with a record yield of 181.5 bushels per acre on 2.5 million more acres. He says it's due to the market signals, which include lower input prices.
In terms of the corn to bean price ratio, still gives you a little bit of favor to corn relative to where we've been at in history. Hence that 91 million acres of corn.
However, the pressure on corn prices will also come from higher Brazilian production.
You're looking at a crop that's about approaching 100 million metric tons this year with normal weather. That's a big crop that has implications for U.S. producers. On top of that, the Chinese are now accepting Brazilian corn.
Soybeans will also have increased South American competition with another record crop on tap.
What do you think that crop looks like next year? You know, you're talking something in the neighborhood of 220 million metric tons of production, somewhere in that neighborhood under a normal weather assumption. That's a lot of beans.
But he expects this to be offset by higher U.S. crush demand. So soybean acreage remains unchanged, and ending stocks are only projected to grow 65 million bushels from last year. With a historically low 6.5% stocks-to-use ratio, prices will drop only 10%.
So as crush margins are good, maybe we export a little bit less beans and we crush a little bit more domestically. This has been one of the drivers in the soybean market here is crush. Folks got it in their mind, 25% increase in crush capacity over the next several years.
Wheat acres are also forecasted to be up 3.8 million acres from last season as higher prices plus crop insurance guarantees incentivize plantings.
With those high prices for wheat, some of it related to war in the Ukraine, you will observe that farmers have responded and planted a lot more wheat.
So USDA projecting a 7% increase in wheat ending stocks and a 50-cent drop in average price for the year. Meyer says cotton acres are forecasted only 10.9 million acres, down 21%, but with higher yield, production is expected to be up nearly 8%, which puts USDA's price projections at 80 cents.